There's this company called SGBX Incorporation, trading on the Nasdaq. For some reason, a lot of companies that I like are on the Nasdaq. The ticker symbol is SGBX. Not that I have anything against the New York Stock Exchange or anything like that, but yeah. So, anyways, it's trading below $7. It's a penny stock. It's a low float stock, and penny stocks I'm not a huge fan of, but there are some penny stocks that I like, and some companies that I've liked before that I've talked about include Planet 13 and a very good food company, which turned out really well. Even though the long-term vision is probably the price will be even higher than what it is today. At least the value of the company. I don't know about the price, but I know the value is substantially going to go up. This company has about a $60 million market cap. It has no debt. The long-term assets are greater than the long-term liabilities. The short-term assets are greater than the short-term liabilities, and the short-term assets are greater than the long-term liabilities. As well as this company is really a sustainable company when you look at it. What they do is really amazing, and it's a fun company. It's not like a CVS or Walgreens Boots Alliance. Like, I own CVS, cool. I own SG Blocks. Well, if they know what it is, it's really cool. Partnership where they built something with the NBA, with Starbucks, with a lot of different things. So it's really interesting, and a lot of public companies actually. So that's very interesting. So yeah, this company is very interesting. It's very sustainable. You can build things so much faster. They're really strong. They're stable, and they look really amazing. You really couldn't tell that they were made out of what they're made out of. And else you probably knew about the company, or you knew about this stuff. So the company's down 11% today. Like I said, find companies that are not priced in what you see in the future, because we know what the future of the present value of a company is. It's the present value of all the future inflows and outflows of that company, future cash inflows and outflows. So the market cap is about $60 million, like I said, about $13 million in cash and cash equivalents, no debt. So debt to equity, amazing, just super duper amazing. They recently made an acquisition that will allow them to be more vertically integrated, which is amazing. And I think that was a smart move. And then also, they have about $25 million in backlog. So, if you're catching on here, you can hear what I said, where I said the market cap is about $60 million. They have about $25 million in backlog and about $13 million in cash and cash equivalents, and their balance sheet looks amazing. That's basically what I said. And I also said this is a low flow stock. It's very sustainable. It's a fun company. So what I'm thinking here is no company really that's really sustainable and fun and it's really good financially should be trading at a PS ratio below 5. But I'm just saying that in general, but I'm just trying to hope you understand here. So PS ratio of 5 just on the backlog alone. $25 million, approximately $25 million in backlog. You put a PS ratio of 5 on that and get about $100 million market cap. And remember, they have more, the balance sheet, amazing. So they also have about $13 million in cash and cash equivalents. So you add that to it, you get $113 million market cap. Let's just take away that $13 million, because for margin of safety purposes, $100 million market cap. This company looks very intriguing at the $60 million market cap it has today, with a low float, amazing balance sheet, no debt, long-term assets greater than long-term liabilities, the short-term assets greater than long-term liabilities, and their short-term liabilities. And like I said, low float, penny stock, very sustainable, fun company. People are willing to pay high multiples on that. It's just a really cool thing, and I think this company not only when you invest in something you want it to succeed. I really want this company to succeed. Now, I haven't invested into it yet, but when we're looking at short squeezes, you obviously seeing people taking their money out of Specs and putting them in the next GME, or GameStop, of course. So I think it's kind of like the rock cycle. It's going to go round and round and round, and so it can start and stop from anywhere that it wants. Some of those people will go back to penny stocks because they can see they can pump them up easily, kind of like a short squeeze. They can pump them up easily because they have a low float. Maybe not so much short interest and stuff like that, but they have a low float. And so what you can see here is, nothing goes up in a straight line. GME has been going up in a straight line. I'm not wishing anything bad on it, but eventually it's going to go back down. Then, market sentiment is going to change. Market sentiment always changes. And right now, the whole market loves GME, and they love that, at least retail investors. And so those retail investors will go back to speculative plays, plays with low float, plays that they can hype up easily. Just things like that, like SPACs and like penny stocks. Or they may move to something else. I have no idea what it would possibly be, But you never know. But I think for the long term, even if like I'm investing in the long term in hopes for short term gains, I think that this company, like Rex Finance likes to say that, I do too. But I really like that saying. But anyways, I think short term gains possibly there, but long term, I think it easily should be trading at $10 per share. That's like why I say short term gains, and because that hype, the market sentiment changing back to low float stocks, SPAC stocks, penny stocks, companies, social media can easily move that have a great mission that are really amazing financially. So yeah, I think financial position, market cap, the correlation, they haven't really correlated properly. It correlated it properly yet. And I think the market cap easily should be over $100 million. That indicates almost a doubling from here. So double digits easily. I see going in the double digits, and I'm extremely bullish on SGBX, ticker symbol SGBX, and I probably will be starting a position in it sooner or later, down 11%. Why? People taking money out of these speculative plays or spec plays and putting them into other companies. Now, I will say one risk with this company, unlike all my other companies. Unlike all of the other companies, Tattoo Chef, Fun Utility Vehicle, not Fun Utility Vehicle, Arcimoto, ticker symbol FUV, of course, which stands for Fun Utility Vehicle. Unlike Dropbox, unlike a lot of different companies, this company doesn't have huge insider ownership, and that scares me because that's one of my major criteria that I like to see. And so, therefore, if I do invest into it, it will be into a speculative play, because for a company like this, I think there should be higher insider ownership than it is today, and especially when it has a market cap of only about 60 million. And that kind of scares me. But then when you see insider transactions, I have seen they've been buying, but not most recently, kind of like a good bit ago. So, and it wasn't. So yeah, it was at a valuation way lower than this. So, I'm just wondering. So they have all that backlog. Will they execute? That's the question. And if you do think they can execute, which I think they possibly can, but do they really have a huge incentive to? So anyways, the point is that I think it's a great spec play, one of the best spec plays out there, and I'm going probably, I don't know for sure, probably going to buy some shares of this amazing company called SGBX, ticker symbol SGBX.